To Godrej Group has forayed into financial services as Godrej Housing Finance. Here's what Pirojsha Godrej had to say.
As a group, we believe in only entering businesses with a very long-term perspective. So this is not a business that we're seeing as a short-term or tactical opportunity. We hope to have this become another pillar of the group's growth over the next several decades. I think that we're obviously just launching this week, so the initial targets are just that, very preliminary. But we'd like to see a loan book size in the first 3 years of about 10,000 crore and maybe over the first 6 or 7 years taking that to about 30,000 crore.
Okay, moving on, let's touch base with the management of Minda Industries. Mr. Sunil Bora, the ED and Group CFO, is with us on the show. Hi, Mr. Bora, good morning. Let's first address the stellar set of numbers that you've delivered. At a time when the markets, the economy and demand was gradually opening up, how did you manage such strong margins and bottom line numbers?
I think we have been consistently working on a path which we have been communicating also very transparently, is that our internal matrices are continuous addition of kit value, continuous gaining of market share and addition of newer customers. And I'm happy to say that the goal which we have set for ourselves, which was whatever industry grows, we grow more than 1.5x of that. And I'm happy to say that even in the environment in the last quarter, where the auto volumes, absolute volumes are lower on an average by around 8%, we have actually been able to outperform that, and it's actually instead of minus 8%, we are actually delivered a top line of plus 8%. Plus in terms of margins, I am sure you'll appreciate that pandemic has taught everything a lot more to be more nimble and to be more cost conscious, and we had a lot of efforts going in that direction. We did work internally, made various task forces to sort of optimize our costs, renegotiate our contracts, and see that how do we overall deliver better value. And I think I'm happy to say that we have actually been successful in delivering what we have set a target for ourselves. In fact, if I may say so, we have actually done better than the targets. And the margins which you see definitely is the result of all such efforts put together. And I'll also thank all our partners, collaborators for chipping in their share of contribution, including our employees. So I think overall, in a nutshell, both the things I think played positively for us. One is the market share gain and also addition of newer products, plus also the consistent focus towards optimizing costs. And I think both these put together have helped us deliver a better margin and better performance in the quarter.
Mr. Bora, during the quarter, what was the ramp-up seen in orders? Because a lot of OEMs were elevating their output and, because of the refilling ahead of festive season, and typically November, October are strong months. So in Q2, did you see a benefit of that as well?
Oh, definitely. That's a cycle every year. So you do see the volume build-up, inventory build-up in the month of October, September, and also sometime in November, depends on what time is the Diwali or the festive season. Last year we had in October, this time we have in middle of November. So, but if you see quarter last year versus quarter this year, so both the quarters actually have that benefit of that seasonal volume. And that is why it's important for our business to see preceding quarter versus this quarter rather than preceding or Q1 versus Q2. So that's why we always see a Q2 versus Q2 to have a real impact of the business, what actually business has delivered, because same festivity was there every year, right? So that is why it's important to see Q2 versus Q2. And I'm happy to say that this time, despite the festive season, actually in middle of November, we have actually been able to deliver better performance in Q2, which ideally should have been more in Q3. So from that perspective, I think we have actually done even better than what would have been expected by inventory filling or maybe by the personal mobility, or initially when we started in May, June, there was a lot of discussions about pent-up factor. I think there are a lot of factors which have come to play. And if we see the industry volumes, they have actually been doing well. And I'm sure you would have seen the numbers for October as well, which has already been announced by almost all the OEMs. And some of the OEMs actually delivering a record or highest ever volumes for the respective businesses. And there are various factors which are at play, including not only festive season, but also a large share, specifically in PVs, also is because of the personal mobility. The thing which we have been speaking for about maybe 6 to 8 months now, since the pandemic started. And that actually has been fructifying into actual sales now, because everybody, whosoever can afford, is trying to have his own mobility and trying to avoid getting in contact with the virus. So avoiding the shared mobility or a public transport, and that impact is actually visible now.
Right. You know, we caught up with Siddharth Lal last week, and he was talking about how big a trend premiumization and customization will be in the future. Talk to us about what are you gathering in terms of technology, in terms of premium segments in the post-COVID era. What edge does it give you to expand your share, and how do you see the trend picking up?
Definitely, the premiumization is a factor which is a continuous factor, be it COVID or a non-COVID. We have seen, if I have to take a few examples, say you have a normal lamp. Now everywhere you are going into a LED lamp. So that is straight away increases your kit value by 2.5 times, right? Same way, earlier we started with headlamps, now you have tail lamps. So everything is getting premiumized. The number of switches which was there in a car earlier, or number of sensors which were there, they are all increasing. They are all premium factor. Something which was premium maybe 4 or 5 years back, today it becomes a necessity. So it's a cycle in itself. If you see from alloy wheel perspective, which is another business which you have, the penetration of alloy wheel in the country is around 20%, whereas if you see globally in developed economies, it is almost 85 to 90%. So there is a huge possibility of premiumization coming at play. And this is the theme which will continuously drive the markets, I would say, for next decade or so, because the kind of gap we have versus the developed economies is huge. That's number one. And number two, even the penetration of vehicles per 1,000 people in India is definitely very, very low. It's actually 1/3 of China, and China itself is 1/3 of the developed economy. So if you see the delta, there's a huge potential to grow. And I think that's the focus we have internally, is not only to maintain our market share, but also how to increase the market share and how to sort of play the premiumization factor. In fact, if I have to take another example, which is a classic horn example, right? The kind of product which we sell in India is not, if I may say so, in par with what we have our own manufacturing in Europe, right? So that also is now getting momentum in India. So that again is a factor which is a premiumization factor which can increase our kit value by more than 2 to 3 times. So there are various factors and various products where this premiumization thing is going to play for next maybe 5 to 10 years.
All right, Mr. Bora, it was great catching up with you, and congratulations once again for a stellar set of numbers. The stock clearly speaks for it. Slipping into a break here, more conversations lined up when we come back. Stay tuned.
Okay, hi everyone and welcome back. You're watching Buy Now, Sell Now on ET Now. It's a power-packed day of earnings and we are getting you corporates speaking about how the quarter went by and of course what the outlook is. Kveri Seeds has delivered quite a good set of numbers for the second quarter. The non-cotton business in particular has driven growth. And now it's going to be particularly interesting because we are seeing a rise in cotton prices come by. So let's introduce on the show Mithun Chand. He's the ED of Kveri Seeds. Mr. Chand, thank you for joining in. So to start with, great EBITDA growth and even stronger profit growth. What is leading to this strength in your profitability and expansion in your margins?
If you compare to previous years, we have grown better in non-cotton crops, as you were telling in the previous quarter, saying that we are focusing more on non-cotton crops. And if you see as a percentage, non-cotton crops for the first half is only 52% compared to 60% last year. So that has helped us to have a better margins compared to previous years. And overall, we were able to control the expenditure to some extent. And operational efficiency have also helped us to have a strong EBITDA margin this year. And if you see in the last year to this year, we have grown by more than 200 basis points in terms of EBITDA margins. That helped us to for a better profitability compared to previous years. And the other point is that compared to first half to second half, we had a bit of other income. Other income is basically returns from the investments that we do in the mutual funds, especially debt-related funds. So that sum got redeemed in the first half. So these two has given us a good growth in terms of the profitability. But living standalone in terms of the minus other income also, if we take out other income from the profitability, even then we have grown much better. And if you see in the crop-wise segment, the profitable crops like maize, rice and vegetables has contributed a lot for us in the first half. So these have helped us to grow a lot.
Okay. Your margins, like you mentioned, have expanded. But the question is there further scope for expansion? And if yes, what would be the drivers going ahead? And, where can, sort of margin sustain?
So other couple of years, because as we are focusing more on non-cotton crops, and definitely our EBITDA should be much better than the cotton crops. So as a combination, as a mix, we'll be growing much in non-cotton crops. That should help us other grow by other 150 to 200 basis points in the next coming years.
Given your pan-India presence, if you could share with us some trends that you're seeing across states and across crops for Kveri Seeds?
If you see the overall scenario, we are present across India. I think we are the only company who is present across all states and operate in most of the crops. In that scenario, if we had two back-to-back good years. We had a very good monsoon last year. We had a very good monsoon this year as well. And if you see across India, most of the tanks, wells, and even the groundwater are improved a lot. So this gave confidence to farmer, and the productivity is also much better than compared to previous years. No doubt, in some areas it got affected by heavy rainfall. We have seen some quality issues and productivity issues in some parts, but overall the sentiment is really good. And we have seen good demand for the products, especially agri products. We have seen the entire chain. We have seen a huge demand in the rural India. So that itself shows the farmers' willingness to spend more, because as we see more productivity in the coming years, crops. So that's a good sentiment which is driving. And I think by this type of rainfall and the productivity, we see that this may continue for another year or so.
Do you think there's a possibility of a bumper Kharif crop in FY21? Can you share with us the outlook for the second half of the year, and if possible for the next year as well? What is it that you're factoring in?
See, the first half is a major half. In fact, first quarter is a major quarter for us. Second half, we do sell some quantity, but it's not a major quarter for us. And basically, in second half, maize moves well. But by seeing the present sentiment, we see a decline in the maize sentiment as the commodity prices are all not that attractive. And even some state governments like Telangana are discouraging maize crop. So we see alternate crops coming up. Basically, the alternate crops might be wheat or rice, and in some parts grams. But in terms of Kveri, yes, we think that the loss in the maize might be compensated between maize, wheat, and vegetables. So as a company, we don't see much of a hit. But in terms of the maize sentiment, the crop might come down a bit compared to previous year, because even if you see the base of last year, we had a very good Rabi maize crop. So based on the base and based on the sentiment, we see a slight decline in the second half, but that should not make much impact on Kveri. Going forward, by seeing the sentiment, we are very positive on the crops like non-cotton crops, and definitely we will gain in those crops. If you see the non-cotton performance, especially like maize, rice, we have grown by more than 40% in both maize and rice. Even the industry has not grown much. In fact, maize, the industry has slightly declined by 0.5%, whereas in rice, hybrid rice, the industry has grown by 5 to 6%, but we have grown close to 40% in both the crops. And in vegetables, we have grown 100%. Even though the base is small, but we have grown by more than 100%. So these are the drivers for our growth, and I think this will continue for medium term to long term, I mean to say 3 to 5 years trend in these crops. And technically, if you talk about next year, definitely we see these crops contributing well, and I think we can grow much better than the industry in the coming years also.
Mr. Chand, many thanks for joining us today on ET Now and just helping our viewers out with what exactly can we expect from Kveri Seeds going forward. Okay, it's time for our BNSN Cloud segment, and here are the stocks that we are talking about this morning. First up, of course, has got to be M&M. The company delivered its second quarter numbers yesterday. They gave some very interesting commentary on the conference call as well. Another stock, and I'll keep it. First, I'll just round up all the numbers. Take a look at Tata Power, Varroc Engineering, Minda Industries. We just spoke to the management. NMDC, by the way, biggest decline since September. The company did announce a buyback, but still, not exactly. It's failing to sort of appease the street. Bata and Bharat Forge as well are some of the other result reactions that we are witnessing today in trade. So that's as well on top of our stock cloud. Ajanta Pharma, very interesting counter over here. This too is in focus, and it's something we'd like to flag off. And then finally, Apollo Pipes in the pipe space, metal company predominantly makes steel pipes. This is as well an interesting one because it is in every possible way, it's a consumer of steel. So what we've been flagging off in terms of rising steel prices may not exactly bode well for this pipe maker. So this as well is an interesting one. That's our BNSN stock cloud for you.
Okay, let's get in our guests on the show. Kunal Bothra on the technicals, A.K. Prabhakar on the fundamentals. Morning, gentlemen. Kunal, would you like to share your sense on the benchmark index, the Nifty 50, 12,700 conquered today? Where do you see it headed? Do you see some short-term volatility or some kind of, swings in divergent ways?
Good morning, Karanya. Yes, I believe that the markets are ripe for some sort of a consolidation. The nature of consolidation could differ, from stocks to stocks and from sector to sector. It's possible that some stocks may go into a time correction, some stocks may go into a retracement or a price correction. So, like for example, what you saw in Bank Nifty today, HDFC Bank is trading sideways, but IndusInd Bank is going through a sharp, I would say, retracement, price retracement. So it's possible that sector-wise and stock-wise, you might have different set of reactions, but we are consolidating. Now, post this consolidation, which I think could probably last for at least a week or two, I believe that the indices should head back higher. I would expect the November series and for the indices, both Nifty and the Bank Nifty, to be much higher than current levels. So I think traders should try and use any kind of short-term dips and opportunities as good levels to enter in again, assuming if they've not entered into the previous last 8 days, 10 days of price rally. Now, in that regards, I would expect many of these mid-cap names, since index is consolidating, to try and show signs of comeback again. So I would suggest 2 buy calls over here. The first one is about Newland Labs. It's a mid-cap name. We don't talk of this stock that often, but I believe on the daily charts, it's hit back to a strong support zone around this 1,050, 1,080 mark. So Newland Labs is a high-risk trade, which I would suggest as a buy. Targets should be kept at approximately 1140, and stoppers could be kept at 1,050 mark. And the second would be a buy on Tata Power. I think it's a very interesting chart. On the daily as well as on the RE time frame, the Bollinger Bands have started to expand on Tata Power. The stock is now trying to start a decent uptrend for itself, breaking out of swing resistances. So I would term this as a low risk trade, a buy on Tata Power with a near-term target of 62, and stoppers could be kept at 55.
Okay. Well, let's also welcome on board Mr. A.K. Prabhakar of IDBI Capital Market Services. Hi, Mr. Prabhakar. What would be your high risk and low risk ideas for our viewers?
Good morning. So market has seen a very good rally. I think here, when you pick up stock, we have to be very slow. So I think, first I'll give my low risk stock, which is Nestle and Bharti Airtel. In Nestle, we need to understand that, what they have done in last 9 years, that is 2,600 crore of expansion, they will do in the next 3 years. And they have a market share of 92% in baby food. And I think that market share is very difficult to shake, and that contributes almost 45% of their revenue. So for a long-term investor and a safety investor, Now, to protect the capital, Nestle is one of the best to buy. So you can do like a SIP, or you can, in a staggered manner, buy it. Bharti Airtel, yesterday, Tarai announced a data which says that Jio is having 40 crore subscribers, but the active subscriber is only 78%. But when you take Bharti Airtel, they have 32 crore subscriber, but the active subscriber is almost 96.85%. So that means the total active subscribers are almost equal. So Jio can be up in numbers, but when it comes to per subscriber revenue or total revenue, I think it is likely to be equal. So I think Bharti Airtel at current level, after the correction it has seen, it is a very good, safer bet for a long-term investor. In high risk, I have Alembic Pharma, where the growth has been very consistent. Almost last quarter, they grew up at 17%. Their EBITDA margin is 31%. And if you see the debt also, it has come down drastically because of the QIB. And Supreme Industry, which is an all-time high stock, is one more high risk, and it is my Diwali pick also. I think these stocks are likely to do well in near term.
There you have it. Those are the top picks then that Kunal as well as Mr. Prabhakar are flagging off. Thank you, gentlemen, for joining in on today's episode of Buy Now, Sell Now. We'll take a very short break. Meanwhile, don't go anywhere.
Welcome back. You're still watching Buy Now, Sell Now, and let's touch base with the management of Aarti Industries. The street clearly doesn't seem too enthused with the performance delivered for the quarter gone by. So let's ask the management what transpired and what's the way forward. We have Mr. Rajendra Godrej, the CMD, joining us right here on the show. Mr. Godrej, good morning and thank you for joining us today. What were the main contributors to the 20% odd top line growth? If you could talk to us about some initiatives undertaken.
Yeah, no, we have been able to operate the specialty chemical near 90% capacity, and actually last year the capacity were down because of raw material shortages, so that's why there is a big jump in top line. And this year also we have tried to go for some non-regular market also, so that we are able to utilize plant more fully. So that is the reason for substantial increase in top line YOY.
So despite a good revenue growth that you saw in Q2, could you tell us why margins were lower?
As I mentioned, last year, because there were some shortages, their product mix was optimized, so margins were relatively higher as compared to the normal. And this year, because of some of the sale is in a non-regular market, it has impacted the margins, and also our new plants have commissioned, and also those expenses also have kicked in.
All right. Hi, Mr. Godrej. This is Mubina as well joining in the conversation. So what kind of, top line growth and margins can we expect in the second half of this fiscal?
Yeah, we will see, both should improve further going forward. And as compared to Q2, and overall, we see that in the year to end as a flattish as compared to the previous year.
And what are the capex plans going forward and additional capacities coming on stream?
No, our chlorination plant only has been part commercialized in Q2. So that will fully get commercialized in second half. And this contract, whatever we have signed, that will also commission in the second half, and then going forward in FY22. This newer projects will increase the volumes going forward in FY22.
Thanks, Mr. Godrej, for joining us this morning and talking about your performance for the quarter gone by. Let's also touch base with the management of Motherson Sumi. They delivered a better than expected set yesterday. The stocks also reacted quite smartly to that. Let's bring on board Mr. Vivek Chand Sehgal to talk more about the outlook and the demand that they're witnessing in Motown at this moment. Mr. Sehgal, thank you so much for joining us today. Since July, demand both in domestic and key global markets, US, UK, Germany, all of that has been improving a fair bit. What are you picking up from your client interactions with regard to the sustenance of this recovery for quarters to come? Is it mainly because of festivals and because of pent-up demand, or is it here to stay?
So definitely there is going to be a challenge, and the challenge is more on the supply side, really, not so much on the demand side. I think people will follow the dictum, which was common sense, that you better have your own some form of personal transportation, and use the shared mobility only when required, really. But I think I don't see that as much of a challenge in the future. I think the next year and a half, 2 years, definitely the demand is going to be pretty robust. And then let's see after that.
Okay. What are the challenges for the auto presently? Because there was a slowdown even before COVID hit us. And COVID came at a time when the economy was already dealing with a host of challenges. Would it therefore have a more lasting impact than the previous crises or down cycles? And by when do you think demand could return to 2018, 2019 levels? You'd also announced some cost-cutting initiatives in August. Can you give us some color on that? Would you say cost rationalization is what helped you deliver a better margin?
So, very unfortunate, COVID, this thing actually led to closure of a lot of our customers and things like that. But I think kudos to our team all over the world. They used this particular time to go through entire bottlenecks that they were seeing in their plants. They brought their bottlenecks down. They improved their efficiency. They reduced their costs dramatically. Also, our traveling was reduced. The new methodology of using Zooms and Teams and other methodology to do your meetings reduce the cost substantially. So I think everything has happened. We have to learn to take these particular opportunity to improve our layouts, improve our cost structures and all that. And I believe my team did a phenomenal job. At least that's what the results are telling us. They've done a phenomenal job in streamlining and things like that. So it's a continuous process. You know, in Motherson, we have cut costs at all costs, is our slogan. And they did a great job in that, an amazing job in that.
All right. Hi, Mr. Sehgal. This is Mubina as well joining into the conversation. The turnaround of the SMP Greenfield plant remains, a key overhang. What's the update there, and have they started contributing to growth meaningfully?
I mean, if you have a look at the performance of SMP, they have virtually reduced their losses to virtually nil, and they're actually EBITDA positive. I think SMP is doing now what was normally doing 2%, 3%, 4%, is now doing 7.2%. So I think they have been the real revelation. and also vindicating Motherson's stand that this is a greenfield. It takes time to come on to a particular level and then, streamlining the whole particular operation. So we've done that very well, and I think the thing is going to get even better in the coming months and quarters.
Okay, all right. In the backdrop of your recent deal as well with Bombardier, which are the other segments that you're looking sort of at under the whole 3CX diversification strategy? If you could just sort of give us a sneak peek of what's brewing.
So we have launched 3 new verticals, which are already explained. Basically, it's healthcare devices, something which we can use our current strengths and leverage that and pivot into this particular new field. The second is aerospace, and allied this into that is as well. The third field is logistics. So a lot of work is happening on that, and we believe that in the coming 5 years, we will actually bring 25% of our turnover will come from here, these 3 fields. These are in no way trying to take away the importance of automotive in our group. That itself will grow from something like close to about 11 billion, will go up to all the way to almost 30 billion or so. So we are going to triple up the automotive side, but yet bring in these new verticals, which will bring in about 20-25% of the new target that we have. We have been working on these 3 verticals for the last 5 years and feel that this is the most promising fields that we should get into, which actually use our strengths, which we have currently, and maximizes it by bringing in new orders, new customers, new fields that we are going to go into. So we feel pretty enthused that, very, very upbeat on the future 5 years.
So, drawing inference from that, will you be an auto ancillary company or a diversified technology and engineering player going forward? What's the long-term vision that you have for Motherson Sumi once the demerger is also done?
No, we are very clear that we are a brick and mortar company. We are an engineering company. We do use a lot of tech. We do use a lot of software, artificial intelligence. We do all that particular thing. We have very strong capabilities over there. But I believe that the foundation of Motherson is more in the manufacturing. So we will be automotive. This thing, 75% of our business is still going to come from there, and yet we bring in new fields which will happen. Don't forget, 45 years we've been focusing on automotive single-handedly. We didn't go into diverse fields anywhere else. And probably that's the reason why we have performed so well. So we are very clear, automotive will do very well. We have no doubts on that. But yet, preparing ourselves to look at newer fields which are taking the strength from Motherson's current operations and then building on that.
All right, Mrs. Sehgal, it's always a pleasure chatting with you. Thank you so much for joining us this morning to talk about Motherson Sumi. Slipping into a break here, but before we do that, I want to reveal the answer for the quiz that we had posted on our Twitter handle this morning. What we asked you essentially is which of the following pharma companies has the highest ROS? Chemcon, Suven Pharma, Laurus Labs and Granules. The correct answer to this question is option B, Suven Pharma. Stepping into a break, more lined up when we come back. Keep it with ET Now. Welcome back. You're still watching Buy Now, Sell Now. Systematic investment plans or SIPs have become a part of our day-to-day language. But SIPs are not only restricted to mutual funds. On this edition of Nivesh Ke Fund Day, we take a look at SIPs in debt funds.
Avan, an often asked viewer query is whether investors should consider doing an SIP in a debt mutual fund.
Investors can consider putting their money into debt mutual funds if the roller coaster ride of equity funds is not for them.
In fact, investors could liken doing an SIP in a debt mutual fund to, say, doing a recurring deposit with a bank.
With one major difference, that returns from a recurring deposit may be guaranteed, but returns from a debt fund will be varied.
Well, that's true, Avan, because debt funds invest in corporate bonds, in commercial papers, government securities, other debt securities, which do tend to carry some amount of risk.
While the risk is definitely more than that of putting money in a fixed deposit, it's sizably less than investing in equity mutual funds.
But just like in equities, Avan, an SIP in debt assets too can help you ride the volatility in the debt market.
So if you're a risk-averse investor but still want to invest in a different class other than a bank deposit, then consider putting your money through an SIP in a debt fund.
And that's all on this edition of Nivesh Ke Fund Day on Times Network. Thanks for watching.
Okay, well, on that note, we'll wrap it up on this episode of Buy Now, Sell Now. From Karanya and myself, it's a goodbye. Thanks for watching.